Okay, welcome back to section number 10 in our day trading with volume profile and order flow course. We're discussing trading strategies that we can use, and in this video we're going to go over highlighting again the importance of high volume node edges. So if you recall, we had this volume profile transitions template that I had shared with you when we were talking about volume profile, the types of profiles we can find, and just the behaviors and how price reacted around it. So first thing we need to remember is that the volume profiles have three main elements. As we discussed in the last video, we have the high volume node, the point of control of that node, which is going to be the point of maximum traded volumes, and then we have the low volume nodes, or the cuts in volumes, which are at the upper and lower edges of what's our high volume nodes. And so the points of control, they can definitely deflect price. I found especially when we're using like a longer term profile and price is transitioning from one high volume node into an area of another node, the point of control of that next node above or below usually give us a significant reaction, or at least it's gonna slow prices down and we're going to get some chop around that area, because as we talked about in the auction process between buyers and sellers, these are areas that act as magnets because there's a lot of liquidity and traded volumes around them. But as we can see, and again, this is not like a completely exhaustive list of every kind of move that we can have into and out of a high volume node, but the main idea is we're looking for deflections with the overall trend direction at the edges of the nodes. So that's the main thing that we want to discuss in this video. It's paying attention to those edges. If we go here, we're back on trading view, and I have here the Euro FX futures. I thought we could look at some other instruments aside from the ES just to show you all this concept in different markets. So in this case, like I said before, let's say I want to analyze this move. So in this case, I would grab a profile and I would just take pretty much the area here that we have as far as volumes go. And let me open this. I'm gonna color the background of this with the histogram just so we can differentiate. And I'm actually gonna, well, I'll just leave it like that, but I'll do another color, just like a light gray. And let me actually see how much this change is going down. Okay. But yeah, let's say, even if we take it up to here, just for this section, and now if we want to analyze how price reacts in the future coming into these profiles, well, and this is something I recommend all of you just do to practice. You can take your horizontal line and just start marking edges of nodes here. Let's use purple, and you can just start marking here, just places where you can see that we have big cuts in volumes here. There's definitely an edge here, an edge here, an edge here, etc. So even if we just take that and we zoom in on this, we can see how markets react in the future. For example, here we start coming down. You can see in this part we come back into this node. This is definitely the main node, but we can even take this part here where we can actually draw this from this part. I'm just gonna use the curve tool right here, because this is the local node, but we also have this other node here, so we can even draw let's say we draw just a major node here, and then we can even refine this node into this inner node here as well. So we have these two major high volume node areas, and we have the edges marked on this. Okay, and actually we can even, let's take off these lines here for now, because we're just going to focus on this section. And we can see over here how we come, test on top here, and we initially reject off of it. We go away, then we come back in, and this is where we can see, in this case, we would be using, let's see, this is what is going to happen. This is what's going to be happening over there. We accept into a node and we deflect from the edge with trend, and then head to the point of control or to the other side of both. And we can see that going on here. We went up, penetrate into the node, come up, and reject right off the top edge the cuts in volumes. We come down, we hit point of control, and we hit bottom edge here. We bounce, and then we see again, we come back in again, in quick deflection, back into the inner area of this node, and then twice we come to the top edge now of this inner part and reject. We come back down, we break down away from this profile, and now we come up, and now we can even go, and now we can see here in this example we're actually, let me see which one we are here. This is pretty much like this one here, where we get out of it, come up, reject off the edge of it now, and then continue down. And we can see this here. Now we are into this lower volume area right here. We come up, reject the bottom of this node, which used to be support before, right over here. Now this area has turned resistance, and price just sells off from here. Okay, but basically you can see how the edges of high volume nodes are basically all just support and resistance levels. Let me go down like that. Okay, so we can have that here. Let's go into another market. Let's go into NQ. Let's go into a 1 hour chart. Let's put the highlights for Monday. And we can do the same thing. Let's activate the visible range profile. And we can do the same thing where we have these areas. We can even, let's put a rectangle here, and you can just mark off on your chart the areas where we have cuts in those profiles. And the way I like to do it pretty much is when I see prices are above this cuts, then I like to make them green, because then in my mind that reminds me that these are areas of support, and we're below them. I like to put them in red, because then that indicates to me that we are now possibly expecting rejections. Like you can see this one here, this one I would make green, because now this is an area of support. But pretty much just observe the behaviors that we have at the edges of these nodes, and you can see also how useful this is to use if you're doing more of a longer term trading style, like a swing trading, etc., on other markets, not just futures but crypto, forex, stocks, etc. You can see how these tools are so valuable, even if you're not really using order flow tools like Delta and footprint charts and stuff. These are really, really great tools to use. And so you can see just how price behaves in this scenarios. For example, here we're trending up, and every time we accept into a node, we use the bottom as support. Here we accept back, we use the bottom as support. Some rejection, we come back, we bounce, and then the inverse from the other side. When we accept back in here, when we move into the top edge, we reject. When we accept on the bottom, we move into this edge, now we reject. This one we can see we just had a pullback and we just rejected off of that, and now we're pretty much right here. If we were going to lose this level, then I suspect we would just do something like this and then reject off of this edge here, which is right underneath this little cluster as well, and this previous support broken. Now we would be resistance underneath, etc. So you can see how you can pretty much delineate the behavior of how you think price is going to go. Obviously, we always want to try to go with trend. So that's what is key to concentrate. If we're in an uptrend, long node bottoms. If we're in a downtrend, short node tops. And we can go okay, well, this is the example we were looking at before. I'll just leave this here, and now let's go to look at some intraday charts here on Sierra. And now let's analyze this from a lower time frame perspective, just using intraday levels. And these levels, you know, they work even if it's like, for example, over here, we can see that we have 3 sessions on the screen right now. We have an RTH here. We have an ETH here. And another RTH here. And you can tell again, because I like to put the area outside of value for extended trading hours in blue, just so I can distinguish it very easily without having to look at the time or dates on the bottom. And so let's put a let's grab the line tool, and you can see here we have this profile over here, and if we just extend lines into the cuts in volumes that we have on these levels, you can see that even on the next day, look how price were trending down, and we're getting some significant reactions from these levels. The same here. This node edge bottom, yes, we did break through this, but you know, we can still see how we had a little bounce, we went back up, and now we have a bounce here. So this is basically an over under pattern. You can see we left a little gap, pull back into the origin, and we start bouncing up. We go up here, also confluence of the value area high from the extended trading hours. This point here pretty much was rejecting right of point of control of extended trading hours. So you can see how the most important thing you can do when evaluating all your trades is pay attention to point of control, value area high, low, and edges or cuts in volumes of previous intraday sessions. And obviously you're going to pay attention to your longer term chart. In this case, these are definitely key. As you can see here, for example, we have this massive node that we've been making here near all-time highs on ES, and if we just put a box in it, and even if you put a box on this smaller one here, I mean, you can see how precisely all these levels get tested. Like here, we fell down, super huge bearish day, we pull back right into this bottom of this edge here, we had support, and now we reject as resistance. Same thing here, we have support, deviation under, and now we come back an over under pattern, and even inside here we have an over under pattern into itself right at the bottom of this node. We come up, and now we're transitioning, shifting into a downtrend, making a lower high right at the top of this node at this area. Obviously this is a 1 hour chart, this is a high time frame, but you know, in this case, once you're here doing your intraday trading, you know you're at the area at the top of a very large high time frame node. So then you can mark off this area when you're coming here and say, okay, this is setting up now for bearish setups. I'm gonna be looking to go short here because, as you can see, we've pretty much broken market structure to the downside here. So now we can just, you know, start playing with looking into shorting this. And these levels, you know, price can really bounce off of these edges a lot of times. You know, that's one of the things that let me look for an example here, because one of the most dangerous things you can do is just assume that an edge is going to break. Like for example here, look at how many times price crashed here. And I know we've talked about this, and if you've read about technical analysis, the more a level gets tested from the same side, the weaker it becomes. I mean, in this case, you can see prices trying to make high, it's making higher highs. Look at the amount of times this came through over here. And if we look, I'm sure if we look at the footprint on this, you're gonna see, or actually let's put the cumulative, the session profile delta. Text. Session delta. Now this, I think I need to raise this. Okay, yeah, I needed to increase the number of days because I only had it to show it back 5 days. So let's just make this, let's look back 20 days. There we go. Okay, yeah, I was a little confused why it wasn't showing. So where were we? Let's say, okay, we were right here. And yes, you can see, I mean, look at the amount of aggressive selling that we have here on the vertical delta. A ton of traders got trapped here, and then just look at the reaction we had. So never assume that the edge of a high volume node is going to break just because we keep testing it. Like here, the worst thing you can do when you're in areas like this is just try to short the bottoms here, thinking like, oh no, this is the 4th, 5th time we've come here, this has to break now. That is really going to is not gonna be a good strategy, and believe me, I tell you from experience. Like, part of the reason I'm making these courses is because I really want to just show you guys what things to avoid that I've learned the hard way through, you know, been trading now for many years now. Same thing here. You can see this profile. We have a very prominent intraday profile, very balanced day here, and the same thing. 1, 2, 3, 4 hits back into the bottom of this node edge, support every time, resistance, resistance. Here we break out, and then once we break out, now the top of this node, which was resistance, support, and now we go, etc. Okay, so you know, it all comes down to basic support and resistance concepts, but it's very important just to know those basic principles. We obviously want to be trading with trend. So with that said, if we're in an uptrend and we go into a new node above, we're looking to long the bottom edge of the high volume nodes. If we're coming down in a downtrend, then we're looking to short the top of the nodes. Okay, and that's pretty much it for this video. Just wanted to highlight and give you some visual examples of the importance of using high volume node edges to go in. It's definitely the areas that will give you the best risk reward probabilities and ratios as far as taking positions, and we'll look more into trade management in detail in the next few videos as well. Okay, see you in the next one.